Last month, I closed a DSCR loan for an investor who had a 500 credit score. In this video, I'm going to show you exactly how that deal got done and what exactly it would cost you as an investor if you have lower credit. It's not a yes or no question. There's a few ways to make it work. Let's dig into it. Most investors think you need at least a 680 or even a 700 score to get approved for a DSCR loan. That's not true. What's different with conventional and different with DSCR, the lender's only looking at the property's income, of course, no personal income evaluation of income like conventional. So they're a little bit more lenient with credit score as opposed to conventional. The floor is a little bit lower for DSCR as opposed to conventional. Most lenders do have a hard cap in terms of minimum credit score. For DSCR, I know most retail banks, most retail lenders, they want to see at least a 640 or even a 620. I myself, being a broker, I have 300 lenders I broker out to. About 90 of them do DSCR. Of that 90, about 4 or 5 of them will go down below 620 for a DSCR. So knowing which lenders to choose can really make or break and really decide if you'll even have a shot at getting that loan approved. Of course, with lower credit score, the loan options are going to be a little bit different, but there are plenty of ways to make it work. Here's where most lenders tend to tier out in terms of credit score relative to LTV or down payment. So if you want to be at that bare minimum, if you have a 500 credit score, your loan can get approved with one of my top investors with 50% loan to value. So this is the loan I mentioned I had just closed the other week. My client purchased because they have a huge down payment. For most people, they might not have that cash, so it's not always gonna make the most sense. They might not always have a chance of being approved. Here are some of the other scores to look out for. If you want to do the bare minimum, 20% down, you would want to be above a 660 score. If you want to do 25% down, you would need a 620 score. 30% down, there's a little bit more wiggle room. Typically above 600 will open up some doors. Again, the higher your score, the more options you're going to have, the more choices you're going to have to choose from. Gives you a lot more flexibility in underwriting in terms of searching out for the best terms. But there are ways to make it work with a 500 credit score. Here's one thing most investors don't realize until it's too late and it shows up on the loan estimate. It's called the LLPA, a loan level pricing adjustment. This is how lenders control interest rates in regards to credit score and down payment. You probably already know the higher the credit score you have, the better overall loan terms you're going to get. The more you put down in a house, of course, the better overall terms and interest rates you're going to get. So these two are highly correlated to each other. If you're buying a house with a minimum down payment, which really would be 15 or 20% down, you're going to need to have a high 700 credit score to make that work. If you're buying a house with a lower score, maybe a 620, you're going to have to compensate and put a bigger down payment. 15, 20% would not work. You're probably looking at 25% or even 30 to make it work. So everything is correlated to each other. Credit score, down payment go hand in hand and get factored into determining what your actual interest rate is going to be. So bad credit does not mean getting denied. It just means your loan might be a little bit more expensive than if you had, of course, higher credit. The best way to think of getting a loan approved if you have a lower score for a DSCR loan, everything's going to be a trade-off, and you're going to want to have compensating factors in other areas to compensate for the fact you have a lower credit score. For example, if you have great credit, you can get away with having a less than 1 DSCR ratio. Again, this is where the rent does not cover the full mortgage payment after everything is said and done. You cannot go for this option if you have lower credit. You're going to have strong rental income. You're going to have that 1-to-1 DSCR ratio. You're going to have reserves, and of course, you're going to have the down payment. Everything is going to be a trade-off. The lender, investor is willing to make it work, but you're going to have to compensate in other categories. And I want to be very straight with you. There are some cases where your score and your credit can be too beat up to actually get approved for a DSCR loan. It's typically not the actual score itself, it's what's on the actual credit report. Is there a bankruptcy, a judgment, tax liens? Are there collections and charged off accounts from recent times? The more recent those accounts are, the less likely that lender is to actually get you approved. From my experience, it's not going to be the actual credit score itself that's going to get you denied. It's really what's on the actual report. What I recommend doing is reach out. We can take a look at a soft credit check of your report, see what's on there before you go through with the actual formal traditional application. Again, my name is Austin Clarence. Please reach out to me with any questions you have about credit score, down payment, I can tell you and give you my honest thoughts on if it makes more sense to go through a credit repair program to have me help work on your credit, or if it makes sense to apply now so you can lock in that house.